Objective 4, unearned revenues. As we have seen in the previous objective related to expenses under payment, here we will actually cover unearned revenues. What do we mean by unearned revenues? By the end of each accounting period, when we do an inventory for accounts and we discover some revenues are not still yet collected and not recorded because their documents are not arrived yet. So we must record these revenues, and the Lebanese chart of accounts gave us specific class for accounts to deal or to cover this issue. So let's see a real life example. On 30/12/2024, Company A sold and delivered merchandise to M&M Company for $200,000, but upon inventory, the company discovered that it cannot prepare the invoice or the document of the invoice before January 7, 2025, which is the next accounting period. So in this case, we record the revenue in the sale account. So we credit 701 account sales of goods invoices, and we use account 418 related to client account invoices under preparation. If you can actually notice that we used account 418 actually similar to account 411 related to the client's accounts. So we debit 418 and we credit 701 as if we reclassified the revenue actually by debiting account clients but invoices under preparation because the invoice is not yet prepared. In example 2, we have on at the end of year 2024, a transported company discovers the transport revenues that are not collected and not recorded by amount of $300,000. Same way in this case, we record the revenue in account 713, which actually represent a sale of service, but we debit 418 related to invoices under preparation for the client accounts. Let's see on another example. At the end of year 2024, Company A discovered that it will receive from government an aid for the year 2024 accounting period of $45,000, but no documents actually not actually arrived yet. So the entry is that we record the revenue under it's a specific account, correct account. Here we credit 740 operating subsidies related to grant revenues, but we debit 4491 related to subsidized receivables. Another example which states on 1/10/2024, a company gives one of employees a personal loan for $120,000 with the yearly interest 9% for 5 years. The company collects the interest yearly starting this date, so starting 1/10/2024. So at the end of year 2024, we have actually 3 months of this actually interest actually related to different accounting periods. So 120,000 the loan times 9% the rate times 3 over 12 months, we got $2,700 must be recorded as actually interest revenues related to this year, and we actually debit account 2552 loans to employees. By that, we recorded the correct interest related to the period related to the year 2024. This actually table represents a summary of all the revenues accounts that we need to use under unearned revenues and their respective actually class 4 accounts needed for the adjusting entries at the end of accounting period. Like actually when we have sales accounts and their documents are not received, all these accounts we will use account actually 418 for invoices under preparation. For example, Actually, revenues from investments, as you can see, will use accounts related to loans, current interest, and 788 other non-operating income. We use account 4699 other miscellaneous receivables non-operating.